All right, all right, all right. Welcome in the room. Welcome in the room. Let me know if you guys could hear me well. Let's get some yeses in the chat. Let's see the chat going active. Let's see. As you enter into the chat room, let me know where you guys are plugging in from. Awesome. We got Chicago in the house. Chicago. Good, good, good. Let's see here. All right, we'll be getting started here in about 1 to 2 minutes as people start to pile in. Welcome, 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 welcome. It's going to be a packed training. I hope you guys are ready to write and take some notes. It is going to be a lot. In a good way, in a very good way. All right, let me get my notes here. All right, now if you guys are plugged it in on Instagram or LinkedIn or YouTube, in order to be able to get access to be able to see the slides, got to join the class, okay? So, if you want to still join the class, you still have the opportunity to just go to taxfreelifestyle.info/masterclass. Or if you're on IG, just comment the word tax-free. If you're on Facebook, comment the word tax-free. But it's going to be, or just go to taxfreelifestyle.info/masterclass, because the people that are in the class are going to be the ones getting all the game and the slides. And the ones that are actually registered will get to keep the recording of everything that we go through during this class. Okay? All right. Now make sure if you're in the Zoom chat, make sure your responses in the chat go to everyone, not host and panelist. And we'll be able to, at least everyone can interact, because I am getting a couple chats, DMs personally. So yes, as everybody comes into the chat, put in where you're from. We're going to be getting started here in about 2 minutes. Put in where you're from, where you plug it in from, where's your business, where do you work. We got Idaho in the house. Good. It's like we got Ohio in the house. Awesome, awesome. All right, so I'll give them about another minute here, and then we'll get rolling. Appreciate you guys for being timely. See, some people, they like to operate on what we call CPT time, right? Which is where, they wait till a good time. But good thing is, the people who come early, you guys are going to get a lot of good stuff. And I know I'm live on all the different platforms. Again, comment the word tax-free if you want to get access to it. But without further ado, I'm going to get started because I got a lot to cover and not a lot of time. Okay, so a lot to cover, not enough time, but I want to make sure I'm respectful for everybody's time. So let's get things rolling here. And I think you guys can see my screen. Okay, so if you didn't know, so this is Tax-Free Lifestyle. This is the Tax-Free Lifestyle Masterclass. Wanted to be able to have the opportunity to share a lot of different things that I've been able to learn along the way in my journey. So I want to dive into a whole bunch of information today. But before we start, I got a couple ground rules. Can you guys, okay, you can't see my screen? Okay, actually, you're right. Here. How about that? Way better. All right, good. There we go. All right, cool. So before we start, I got a couple ground rules, okay? I want to make sure that you guys get the most value out of this course, out of this class, so this really quick master class. So I need you to stop what you're doing right now, go grab a pen, grab some paper, because I promise you, you're going to want to take notes. You're going to want to take notes on what I'm going to have to talk about today, okay? Make sure you pause everything. Maybe in this next hour and a half, I'm trying to get you guys out of here fast. Pause everything, because I'm telling you the information. I'm not gatekeeping. I'm not gatekeeping anything. I'm going to give you all the game tonight. So you want to make sure you're involved, right? Maybe put your phone on DND and save your questions till the end, because I know you're probably going to have a lot of questions. Just make sure you save them to the end. If we have time to cover them, we can cover them. We could potentially cover them one-on-one if you decide to work with my team, okay? Positive vibes only. Guess what? We're on a webinar, guys, so I can't see you, okay? I cannot see your face. So I need you to play a part in the chat. Say some things in the chat. I know I'm live on Facebook and Instagram, so I got to figure out how to be able to see all that as well. But just put some things in the chat. I should be able to see a lot of your comments and whatnot. Will show me that you guys are engaged. Positive vibes only, and stay until the end. Like, don't start something you're not gonna finish. Right? Just stay until the end. Trust me. I'm gonna make it worth your while. There's gonna be a lot of stuff that we're gonna cover. But stay till the end, okay? All right, now let's go. So I'm going to be talking about some tax wealth secrets. I'm going to talk to you about how to build wealth using tax saving strategies without worrying about the IRS. I know a lot of people are worried about the IRS, so I want to make sure that you don't worry about them, and we can build wealth with each other without having to worry about them. Okay? So who am I? My name is Ibrahim Muhammad. I am the CEO of I Am Accounting. And super excited to be able to give you guys a ton of information. I'm going to dive into my background really, really briefly. But before I even get into that, I want to make a bold promise, okay? In the next 60 to 90 minutes, I'm going to show you how you as a business owner or a skilled professional or W-2 taxpayer, whatever you are, I'm going to show you how you can maximize your earnings and keep more of your money in your pocket where it belongs with some proven tax saving strategies, okay? That's my bold promise, okay? Now, also, if you stay until the end, I'm going to gift you with some free resources that you can immediately implement to be able to reduce your tax bill. Okay? Does that sound good? Let me know in the chat. Does that sound good? Okay. All right. So, now, full transparency, there will be an opportunity to be able to work with our team after I've delivered a ton of value first, right? So I'm going to make sure I turn in a lot of value during this call. That way you feel comfortable. And again, we're not working with everybody, but it will be an opportunity if things make sense to you to be able to partner up with our team. Okay, does that sound good? Let me get some feedback here. Okay, good. All right, so really quickly, before I even dive into it, if you're not following me on YouTube quite yet, make sure you go hit that subscribe button. I'm going to be giving a lot of value on a week-to-week basis. You can just go to, just type in the Tax Huddle on YouTube. You'll be able to find it. I come from a sports background, so I'm going to give you some winning financial plays, coming with more of a sports mindset, where you can just kind of apply it to your day-to-day life, right? A lot of different strategies you can implement that maybe you've heard of, but I'm going to make it make sense, right? So the math starts to math. Okay, so make sure you go subscribe. And yeah, so how did I actually get into this, right? I know a lot of you probably thinking, okay, like, how did I actually get into this? How did I start my own firm? So just a really quick background. I actually was born and raised in Chicago, Illinois. My family's actually from Nigeria. So I was born in Chicago. I lived in uptown Chicago, but I actually went to school in Evanston. So I was doing a little bit of commute. Probably wasn't, we'll put that to the side, okay? At the young age, I ended up moving to Nigeria. My mom wanted to build that discipline in my life. So I ended up moving to Nigeria, lived there for about 4.5 years, I believe. Ended up coming back, I want to say when I was 8 or 9 years old. And during that time, I learned a lot of different principles about my culture, about my family. And, I was very heavily involved in soccer, in sports and whatnot, that I ended up transitioning to playing football, to where I did well enough to where I actually got a scholarship to play at Ashland University before I got to the University of Akron. So I played at Ashland University my freshman year, ended up transferring to the University of Akron, and that's where I ended up finishing off my college career at. And I was studying accounting while I was there. Okay, so I was studying accounting, and if you don't know, the University of Akron is actually accredited by the AACSB, okay? So pretty much they're the gold standard for business education. So long story short, they were accredited for being one of the top schools in the entire country for business, okay? So for me, when I was thinking about what I wanted to study, I was looking in the accounting industry. If you know any like Nigerians, like it's either you're going to go to school to be a doctor, an engineer, a nurse, something medical for sure. But I wanted to be on the business side, so I studied accounting while I was there. I was very, very fortunate to be able to play football. So I played football while I was there. That's my brother in that picture, and it was a great experience. Was able to go to a bowl game. Didn't necessarily go the way that I wanted it to go. Wanted to go play professional. And here I'll move my face so you guys can see. But I wanted to be able to go play professional, and it didn't go my way, right? But again, that's why I was focused on my education a little bit, and got my degree. And, straight out of school, so I actually met my wife at the University of Akron, right? So I met my wife. This is my beautiful wife right here, Alexis, and our beautiful daughter, Zoe. I'm probably going to update this picture because she's like 15, we're going on 15, she is 15 months now. And she's way bigger, but, met my wife there. She was studying criminal justice while she was there as well. And, straight out of school, I went right out of the gate, about a month later, I got a job at Nestle, which is a Fortune 500 company. So I've been able to work for a lot of different companies, which I'll talk about, and, got several promotions while I was there. I was in supply chain and finance, had really, really good experience while I was there. But I wanted more, right? So I was like, what? I want to go get my master's. I'm going to get my master's in business. So I decided to actually go and get my master's, right? So this is my lovely mom and my wife again. So I took that extra year, and the reason why is because you need 150 credits to be a certified public accountant, right? So I wanted to be able to have enough credits so I could become a CPA. And as I was doing that, I was still working for 40 hours a week, working at my job, even 50, 60 hours a week. I ended up leaving Nestle to go work for another Fortune 500 company called Rockwell Automation. Right, did really well while I was there, performed well, but again, I wanted more. I wanted to increase my income. I wanted to, have more experience. So decided to move on, and then I ended up going to another company. I went to Moen. Moen is, the kitchen faucet company, and I had the opportunity I was there for a couple years, had some great experience, worked my way up as well, and I was like, okay, this is cool. But I think I want more, right? I felt like there was still more that I had to offer, right? So then I went and got a job at Goodyear back in Akron, where near where I live. My daughter was being born. I was like, hey, I want to be closer to home. Goodyear, everybody knows Goodyear, phenomenal company. So I was like, let me go there, right? So I was there for about a year. So I'm like 7 years into my career, and I'm just like, is this the path that I really wanted to go? Right? Is this the way that I wanted? Like, why was I hopping from company to company? Most people stay with companies for 10 years, 15 years, 20 years. Why was I hopping from company to company? And the reality of it is that I just wasn't satisfied with where my life was. I wasn't satisfied with clocking in, clocking out. That's just my story. And I just wasn't satisfied for it, and I just didn't know which route I wanted to go, right? I was, I guess you could say I had a come to Jesus moment. But then I stumbled upon this book, okay? Now, has anybody ever heard of a book called Rich Dad, Poor Dad? Put a yes in the chat if you've ever heard of this book before. Okay, we got some yeses. Okay, awesome. Now, Robert Kiyosaki was actually the person who actually wrote this book, and he talks about these cash flow quadrants, and I think it's very important to be able to understand the different ways on how we generate income. He talk about employees, right? You trade your time to make money, right? You have a salary maybe, or the business owns it, right? But you clock in, you work a certain amount of hours, you get a paycheck, right? You work a certain amount of hours, you get a paycheck. And then I saw that there was self-employed, right? That's on the left side. And he calls it's the active side of creating income, right? You're trading your time to be able to generate that income. So we had time here, right? You traded time for more money. And typically when you're self-employed, when you run the business on your own, and maybe you try to hire some employees, a lot of the time you're going to trade a lot of time to be able to make that extra income. Maybe you have more flexibility. You can control the hours that you work, maybe, right? But you're self-employed, so it does take a lot of your time. So most people want to move over to the right side, and he talks about it. You want to move over to the right side because the right side is what he calls passive income, residual income. And I don't even like to use the word passive because passive sounds like something for nothing. I like to use the word like asset generated, right? Asset generated income. you want to be able to develop assets and create assets for yourself. So you want to move over to the right side. And there's business ownership, right? That's people working for you, working with you, alongside of you, right? To where you can generate that additional income. And that's things like franchises out there. That's things like network marketing. That's things like, traditional C corporations, right? That's the business owner side of things. And then there's the investors. And the investors, that's the investing in stocks, right? That's the investing in real estate. That's the investing in things like in those areas where it is dependent on the market sometimes. And you typically have to have capital to be able to actually invest more money, right? It's money for more money. But he said on the right side of the quadrant, on the right side of the quadrant, that's where 90% of the wealth is built. And I was like, okay, so I'm making this significant income at my job. I'm making six figures. Like, I still don't feel satisfied. Wow, I'm still living paycheck to paycheck. How can I bridge that gap? And he talked about the right side being that way. So really quick pulse. Where do you guys land? Are you guys an E? Are you guys a B? Are you guys an S? Are you an I? Let me know in the chat. Give me a letter on what you. Maybe it's E and B. Maybe it's E and S. Maybe it's I. All right, we got all four. We got I. Okay, awesome. Let me connect the chat here. Okay, awesome, good. Okay, yep, we got E, B, and S. Yep, awesome. So again, I wanted to learn more about that side. So I started to study that side a lot more because I knew the wealth was built there. So what exactly did I decide to do? I decided, I'm going to become an entrepreneur. I want to be an entrepreneur. That I believe that's what I was called to do. And so what exactly did I do? So first and foremost, I took action. And then I invested my time and my resources. I want to make sure I was investing my time and my resources. And the reality of it is, I learned from the best. I knew I had to have the right people in my corner that had my back so I could learn the right information. Okay? And I believe it paid off. Okay, I believe it paid off, and I don't want you to just take my word for it. Let me show you a couple examples. Okay? Now, before I even get to those examples, these are some of my mentors, right? These are some of the mentors that I've been able to have in the financial industry, in the accounting industry, that have been able to help pave the way for me to be able to follow along. So Michelle Valbrun, right? CPA, award-winning author, tax strategist, speaker, right? Phenomenal CPA in the industry, just killing the game in the industry. One of my right hands as far as learning the industry. He taught me a lot of tax planning and stuff that I'm going to be talking about today. Then Bill Von Fumetti, right? Wall Street Journal best-selling author of Keyboard Rich. Right, he actually started teaching me the world of bookkeeping and accounting. Right, the day-to-day stuff that may seem mundane, but is very, very needed. Right, that's what Bill taught me. And then Weston Hill, CEO and founder of the Tax Biz, the Tax Stop, the Lead Pro Giants, the IRS tax repair. He taught me everything I know about tax preparation and how to streamline the process to where, the reality of it is, guys, today I still have clients coming in who are being scammed. Right, people are inflating their income, doing things very illegally and unethical, to where it's messing them up, and there's a lot of tax resolution that needs to be done. Right, Weston showed me how to do it very legally and ethically, as well as all that, and that's what I pride myself on, is being able to do it legally and ethically. That way, the IRS is offered back. There's a lot of ways to where you don't have to try to find different illegal loopholes. You can do it the right way and still build wealth. Right, Carter Cofield, CPA. Was awarded #1 accountant for entrepreneurs. So this guy, he taught me the world of like the social media aspect of it, right? I was able to learn how to be able to build my social media platform to be able to get access to, a lot of information from an accounting perspective, right? Really taught me how to be, an accounting entrepreneur. And then Carlton Dennis as well, licensed enrolled agent, CEO of the Tax Alchemy, just super knowledgeable on the real estate industry when it comes to taxes, was able to give me a lot of knowledge on how to be able to leverage real estate to be able to take access of some different tax strategies, okay? So these are some of my mentors. I wanted to make sure that I was getting access to some of the best people that were in the market that I can be able to learn from or have access as mentors, okay? Now, can I be transparent? Let me know in the chat. Can I be transparent? Okay. Yes, please. Okay. Awesome. So what I want to do is, so about a couple years ago, when I first got access to this environment, and these different mentors and coaches, they showed me immediate strategies that I was able to apply to my own personal tax return. Like that, I think it was literally close towards the end of the year, I applied it immediately and saw the immediate return, right? To where it was filing for about $172,000, was able to find $43,000 worth, a little, almost $44,000 worth of tax deductions, right? That I was able to implement to my own tax return, right? And it lowered my taxable income to $102,000 to where I got a refund of almost $12,000. Almost $12,000. I was like, you know what? I don't want to just talk about it. Like, let me try it for myself first, and then let me start to teach people how to do this. And I implemented it and immediately saw the return. Right? Now, these tax secrets, they've helped my clients save thousands in taxes and exponentially increase their wealth. Right? So a couple of examples, like I've had, these are several different examples from a lot of the taxes that I've been able to prepare, and paid zero in taxes, $35,000 slashed, right? $5,700 saved in taxes, $7,000 saved in a tax write-off, with me just finding different ways to be able to leverage a tax code to be able to make some of these deductions, right? So even Patricia, she's a CEO of Nick Life Home Care. She said Ibrahim took the time to create a tailored plan for businesses for my business, and that knowledge is game changer. I recommend him to everyone because if he could save me $17,000, he could do the same and even more for you. Right? Then we have Kelly Jace, founder of Dren Cycle Studio. Best tax service I've ever had. I'm beyond grateful that I went with him with my gut and reached out. Ibrahim exceeded my expectations. He was professional, extremely thorough. I didn't think I would get a refund at all this year, so I was in shock to hear that I would be right. And when I heard the amount, I almost fell out of my chair. Right? He's a gem. I highly recommend this company. You won't be disappointed. Okay. Now, there's several reviews you can go look at on my website. Right? But before I even get into anything else, I just want to give a quick disclaimer. This training is for informational purposes only, right? I'm not giving you legal advice or professional advice. I encourage you to go consult with a licensed tax professional, an enrolled agent, or CPA, somebody who can I'm going to talk about a lot of different strategies, but it doesn't necessarily mean it applies to you in your current situation. You need a detailed strategy that applies to you, and you want to make sure you get professional advice. Okay? Is that fair? Okay. Good. So, the good news about taxes is the fact that the tax code is not created to make you pay a lot of money. I know a lot of people are saying, well, it's just so unfair. Why is this much coming out of my check? Why am I paying so much in taxes? Like, why? And most people don't realize that it's a rule book. I think of it as a playbook, right? If you understand how to play the game, right? It's my playbook. I just need to understand how to play the game. The tax code is it's a legal way to help teach you how to avoid paying taxes, right? That's why you hear people like, Donald Trump paying $0 in taxes, and people get upset. I didn't want to get upset. I wanted to say, what is he doing? How can I learn the game, right? Successful people don't complain, right? Successful people just want to go find the information so they can go implement it themselves. So that's what I wanted to do. So what type of business do these strategies that I'm going to talk about work for? So they work for small businesses. They work for small business owners. They work for skilled professionals. And then they also work for solopreneurs. Okay, so if you fall along these lines, and even I'm going to talk about some things as far as from a W-2 taxpayer, right? But if you fall along these lines, like the tax code, I believe is literally meant it's focused on helping business owners, entrepreneurs. You have to have a business to truly get the actual benefits from the tax code, right? So you got to have a business, you got to be a skilled professional, you got to be a solopreneur, okay? Now, by the end of this masterclass, I want to show you and help you build wealth through a lot of tax saving strategies without worrying about the IRS, right? That's my goal. That's what I want to teach you by the end of this class. So what am I going to cover? Secret number one, I want to show you why understanding taxes is your biggest return on your investment to increase your wealth. Okay, that's the number one thing I want to show you. Secret number two is how successful entrepreneurs invest and save, and investors save anywhere from $10K to $100K in taxes legally and ethically. Okay, that's secret number two. And then secret number three is how to find and hire the right tax professional that's going to save you thousands, if not more. Okay, so quick pulse. which one of these secrets do you think you want to learn the most, right? Which one of these do you feel like you need the most? Is it a 1? Is it a 2? Is it 3? Let me know in the chat. Okay, we got some 1s. Okay, I see some 1s in the other chat. Okay, there we go. We got a 2. Okay, we got 2 and 3. Okay, awesome. So let's dive into some of this. So imagine what it would feel like if you had an additional $10,000 to $50,000 per year just from saving on taxes. Like, I want you to just actually think about, how would that feel? How would that make you feel if you had an additional $10,000 to $50,000 that was saved, and you can pay that? You don't have to pay any taxes. You can save it, right? What would you do with that money? Like, who would you help with that money, right? Actually visualize yourself there, right? Put a yes in the chat if you think you can give, if with an additional $10,000 to $50,000, that would provide some value, right? Okay, cool. So let's do this. Okay, so my promise is I'm gonna be in the position to where I'm gonna show you how you can be able to provide for your business and your family. I'm gonna give you the tools that you're gonna need to be able to provide for your business and your family. Right? That's my promise. I'm gonna give you a lot of tools today. I'm gonna be throwing it at you. So I wanna make sure you guys have your notebook out right now, because we're gonna dive into these 3 secrets, and you're gonna wanna take notes. Okay? And without further ado, let's dive into it. Let's dive into secret number 1. So, why understanding taxes is your biggest return on investment to increasing your wealth. Why is that? So, can I show you how to reduce your single most largest expense? Because I know what the most largest expense is, and it might be my point of view, okay? But I know what's your largest expense. Wherever you are, I know what your largest expense is. And what it means is you have to start off, you have to diagnose for real, like where your current finances are. You have to understand what your current finances are first. But your single largest expense, let me get Mike on camera here. Okay, cool. Your single largest expense is taxes. Right? I believe taxes are your single largest expense. Now let me show you why. Okay? When you make money, what do you pay? Put it in the chat. What do you pay? What kind of taxes do you pay? Okay? I'll give it to you guys. We pay income tax. Okay? There we go. We pay income tax. Right? And when you buy something, what do you pay? You pay sales tax. Right? What happens when you purchase property? What kind of taxes do you pay? Who's got to guess? Property tax or capital gains tax. Yeah, absolutely. Right? And then when you profit from real estate, what do you have to pay? Capital gains, right? We got ahead, right? But when you profit, that's when you pay capital gains, right? Which, again, with the right strategies, we're going to talk about how to get around that. And then when you die, which is sad, what do you have to pay? Yeah, you gotta pay the death tax. You gotta pay the estate tax, right? Which is crazy. You still have to pay taxes when you're dead, right? So, but what most people don't truly understand is that the biggest tax of all is one more thing. What is the biggest tax? I didn't list it. What is the biggest tax of all? I didn't put it in there. Take a guess. Take a guess. The biggest tax of all. Oh, capital gains. Okay, that's a good guess. See, Melinda, we thinking. It's the ignorance tax, right? The ignorance tax, and ignorance, like sometimes some people, it has a negative connotation, right? About the ignorance, but ignorance is really just a lack of information, a lack of knowledge, right? So you just don't know what you don't know, right? But after today, I'm gonna show you how you can know. Right? You don't have to be ignorant any longer, right? We're not going to cover everything, but we're going to cover a decent amount to where you don't have to be ignorant to taxes anymore, okay? Now, what are the consequences of ignorance tax? Failing to abide by the IRS rules, it can lead to fines and penalties, right? It can lead to you overpaying in taxes due to the lack of knowledge or the lack of understanding of the tax code, right? Or maybe your accountant just wasn't necessarily knowledgeable on the information. right? And it can potentially lose to you losing your business, which is what we don't want. We don't want you to lose your business, right? But that could be something that leads to, right? Ignorance tax equals overpayment. That is the fact. Now, put a yes in chat. Have you ever felt like you've overpaid? Put a yes in chat if you believe you've ever overpaid in taxes. Yep. Yes, yeah. So the reality of it is this number, 82,000, this stands for the amount of pages that are in the tax code. There's a significant amount. It continues to grow from 76,000 to 77,000. It's ever changing. There's always new laws being passed, right? To where you have to be able to stay updated with the stuff. And even Albert Einstein, he said the hardest thing in the world to understand is the income tax. And that's one of the hardest things in the world is the income tax. So it is very complicated, right? So you need to make sure that you're staying up to date. Now, what society tells us is that this is what it looks like. The poor people, you got to go make your money, right? You go make your money, and then you go pay taxes, right? Once you make money, you'll pay taxes, right? It comes immediately out of your check with your withholdings, and then with what's left over, you go spend your money. That's why most people live paycheck to paycheck, right? Because they make money. They pay a bunch of taxes, right? As you get higher on the tax bracket, all the way up to the 37% tax bracket, it's a lot of taxes that come out, right? So if you're an employee, you pay taxes right away, and then you spend what's left. A lot of time, it's not as much as it should be if you were on the right side, right? With the rich, with how the rich, treat their money, right? How they view their money is they make money, they go spend some money, and then they pay taxes to what's left. And they try to make sure there's not a lot left to give with taxes, right? We're going to pay our legal share, right? But we want to make sure we're not. I don't want to tip. I don't want to tip the IRS. I want to give them what's legally theirs, but I'm not going to leave a tip, right? So that's the right side. I just like to view it as the left side is they're just ignorant, right? They're just ignorant to the tax code. It's not. It might not be by their fault. They just need more information. They need to get around the right people. And the rich are just enlightened. They just have access to more information. Now, it's not the CPA with the most experience or the person who knows or who has all these different credentials. It's about the person who actually knows the game, who actually knows the tax system, right? And that's really the big secret. Does that make sense? Let me know if you guys are following me. Does that make sense? Put a yes in the chat if that makes sense. Good. Okay, we're getting into secret 2, right? And I'm going to preface this. Okay, so how successful entrepreneurs and investors save $10,000 to $100,000 in taxes legally and ethically. I'm going to cover a lot of stuff. Okay, there's too much information I cover. I want to make sure I was giving value, so I'm going to give a lot of information today. But make sure you're taking notes on this stuff. Okay, so can I show you how you can legally deduct up to $10,000 to $100,000 and how I do it for my clients? Can I show you different ways? Do I have the permission? Okay, so before we even dive into the information on that, what are tax deductions and tax credits? Because I still believe this is one of the most confusing things for a lot of my clients. So tax deductions, what tax deductions do, they reduce your taxable income, okay? So they lower the amount that you're actually subject to as far as taxation goes. So if you make $100,000, but you have tax deductions of $20,000, that tax deductions, you take $10,000 minus $20,000, now your taxable income is $80,000, and you take that $80,000 and you put it on whatever tax bracket you fall in after all your total income, your total taxable income, and that's what you're taxed on. So it just lowers the amount that you're taxed on, okay? Whereas a tax credit, it directly reduces the amount that that are owed on your taxes. So let's keep that same scenario. You have $100,000, $20,000 in deductions. Now your taxable income is $80,000, and then you pay taxes on it. Let's say your tax bill is like, for number's sake, let's say it's $10,000. You owe $10,000 off of that $80,000 in taxes. Okay, but you have a credit that's worth $2,000. The tax credits or a dollar for dollar reduction in your tax liability. So if you owe $10,000 and you get a tax credit of $2,000, now you only owe $8,000. It immediately reduces it. It's a dollar for dollar discount, how I like to see it. right? So those are the difference. Tax deductions, they lower your taxable income on how much you're going to get taxed on based on where you're at with the tax brackets. Tax credits are a dollar for dollar discount and removes that immediately, okay? So there's only going to be one code that I'm gonna give to you guys today that you should remember, right? It should be engraved in your brain. And it's section code 162A. Okay, and right here it says it allows the deduction for all ordinary and necessary expenses paid or incurred during the taxable year in carrying on any trade or business. Okay, so that means in simple terms is if you're in the pursuit of income for your business, legally and ethically, a legal and ethical business, right? Hopefully we'll talk about incorporated, right? If you're in the pursuit of income and it's legally ordinary and necessary, and you could prove that in front of the IRS, it could be a tax deduction. It could be a write-off, right? So we have to see what makes sense. Ever since COVID, things have changed, right? To where people are working from home now. It's where you see people taking different home deductions, right? So it has to make sense for your business, but it allows you to deduct anything that's ordinary and necessary for your business as long as you're in the pursuit of income, okay? So what are 6 ways that you can live tax-free forever? All right, what are 6 ways that you can live tax-free forever? Number 1 are deductions. We just talked about it, right? You can utilize allowable expenses to reduce your taxable income, and you can start to optimize your tax liabilities, right? Find different deductions. We'll talk about some deductions. I'm going to give you some more game, but you want to have deductions that are going to lower your taxable income, right? So find what fits your specific business, your specific needs. And then we have legal entity structure, right? Selecting the appropriate business structure for your business is one of the most important things that you can do. It's the foundation on how you get started, right? I always people say, just get started, right? Don't delay, just get started. You'll start making money, right? But the way you set up your tax and legal entity structure is very important because that's going to decide how you're actually taxed. And we'll talk about that later, but that's very important. But we can there's different ways to live tax-free based on what tax legal entity structure you are. And then we have retirement, okay? So with retirement, you can save money for retirement now, pay less taxes today, and have money for later, right? You don't want to work for the rest of your life. You want to be able to put money away for the future. So how about we take the tax deduction? You have the opportunity to take the tax deduction now. You can defer it, right? But you can pay less taxes today and have more money later, right? That's cool. So we can do some things with retirement. Then there's insurance. You can get insurance for your business or for yourself to protect yourself and also pay less in taxes where it can be tax deductible, right? So there's different insurance policies and things like that you can look into. And then there's legal loopholes. I don't even know why they call it loopholes because some people may have a negative connotation when it comes to loopholes, but there's legal loopholes out there that can actually help you pay less taxes without breaking the rules, okay? And then the last one is advanced planning strategies. Okay, there's advanced planning strategies that you can actually implement, smart techniques and smart tax strategies that you can utilize to plan ahead, right? Speed up some of the tax, some of your tax benefits versus in the future. And we'll talk a little bit more about that, but there's some a lot of different advanced ones. I'll talk about a few today. Okay, now, what are the top deductions for business owners? Number 1, most people know is your vehicle. You have vehicle expenses, right? You can deduct costs related to using your vehicle for your business purposes, like gas, maintenance, and depreciation, right? One of my favorites, depreciation, which we'll talk about, right? You could, again, it's a depreciating asset, which means it has wear and tear over time, right? The useful life of a vehicle is only about 5 years, right? So you can be able to take a deduction over every single year for that vehicle, right? For all those different expenses. And then we have advertising, right? If you're advertising your business, you can write these things off. Things from ads, from Facebook ads, right? Some of you guys are plugging in on Facebook. Different marketing materials. You got to market your business. Website costs, right? When you're setting up your business, those things are all tax deductible. Are you keeping track of it? Then we have supplies and equipment, right? You can deduct the cost of items that you purchase or equipment or supplies you buy for your business. Office supplies, tools that you need for your business, depending on the industry that you're in. Machinery for some businesses. Those are all tax deductible. And then professional services or education. You can write off different courseworks that you're taking there's a lot of different things that you could take, from YouTube courses to social media courses to learn about your industry, right? Those could be written off. Then there's consultants. You can write off your lawyers. You can write my services can be written off as an accountant, as a tax preparer, as a tax strategist. My services can be written off on your tax return. Right? These are several different professional services in education that you can write off. And then there's travel, right? You can write off your travel, your rental cars, right? Your lodging, your airfare, your meals, right? These are things that you can, if you're traveling for business, meeting with a client for business, these are things that you can write off. And the last one I have here are meals, right? You can deduct a portion of the cost of business-related meals, and it's usually 50% as long as it's directly related to business activities and you're not doing anything extravagant. Okay? All right, quick pulse. Are you guys using any of these strategies right now? Let me get a pulse. Have you guys heard of these strategies before? Are these some things that you utilize today already? Okay, good. All right, well, let me ask you this. Do you want some more? Let me know. Maybe I just want to make sure I'm not overwhelming you guys. All right, do you want some more? Do you want some more advanced? Okay. Okay, for sure. Okay, good. So let me give you 5 investments that you can utilize to immediately reduce your tax bill to like this year, 2024. Right? What are some? Guess what? We're in Q2. We're in Q4 is coming. We're in Q3. I mean, Q3 and Q4 is coming up. How can you immediately reduce your tax bill so you don't get hit with an additional tax bill, or you don't get a significant refund because you're just paying all your money to taxes? So how can you do that? First one is real estate. Right now, with real estate, you get access to depreciation deduction. Okay, and the depreciation deduction can offset the entire amount of your rental income. Right, and depending on the type of real estate you get, which we can get into details, but it can significantly reduce your taxable income. Real estate is one of the best ways to be able to reduce your taxable income, right? Especially if you're a high income earner. Okay, now what are the ways that you can qualify, right, to be a real estate to actually do real estate strategies? Write these down. You can look them up later. There's a lot to cover and a lot of different rules that go into them. But there's REPS, which is a real estate professional status, right? I think you have to materially participate. You have to be at least 750 hours involved in your property for the entire year. And the difference is there's short-term rentals. Right, short-term rentals where you can rent out a property. You can do Airbnbs, right, for 7 days or less. You have to materially participate in that as well. But there's a lot of different tests that you can qualify for. From one of the most common ones is the 100-hour test, right? You just have to be having more time involved than any other person, whether it's a cleaning person in the rental property, or whether it's the landscaping person. You have to spend more hours than them and at least participate at least 100 hours, right? And there's a couple other tests, but these are the 2 main ways in real estate where you can be able to leverage that. And I probably even talk about that in here, so got ahead of myself, but over 50% of professional services in real estate from a real estate professional status, 750 hours a year, or you have to materially participate. Whereas short-term rental, it has to be an average stay of at least 7 days or less. You have to materially participate, and then minimum of 100 hours per year. Okay, so that's the first one, right? There's a lot of benefits to it. There's tax efficiency. It can offset your active income. And then from the short-term rentals, there's a lot of flexibility because a lot of us are busy. Maybe some people, I don't think I'm going to have all that time to invest into it. That's why most people go for short-term rentals, right? Because there's a lot of different loopholes that you can be able to utilize with short-term rentals to have that flexibility and also have those higher returns. Okay, so the first one's real estate. The second one is oil and gas, right? So the government allows tax deductions for intangible and tangible drilling costs that can cover the majority of the investment, with 100% of it, of the intangibles being deductible immediately, right? So when you think about there's intangible drilling costs, there's tangible drilling costs, and then the importance of it is it's another investment. A lot of people are investing in stocks. They're investing in the stock market, right? This is another way to be able to have your money go into things. And there's obviously things with, with charitable contributions that you can get access to. But oil and gas is another one of the big investments that not a lot of people are familiar with that you can invest in, similar to real estate, but has its own different perks as well, right? And it's affordable. And then there's different things from, an energy perspective. Right, so there's a lot of opportunities, and those are the two biggest ways I think some people just need more education on, from a real estate perspective, and then oil and gas. Right, some of you are probably already involved in this third one, right? Traditional 401k, right? Your traditional 401k can be tax deductible. Your contributions, you can max it out. And now again, you're saving for the future. You're getting the tax benefits today, right? There's high contribution limits with the traditional 401k. So again, contribution limits, they can reduce your taxable income of the amount that's invested, and there's the high contribution limits with utilizing a 401k. And then even also potential employer matching if you do have a W-2 and you also want to kind of double dip. And then there's traditional IRAs, right? So traditional IRAs, they offer that tax deductible contribution similar to traditional 401ks. But it's pretty straightforward, right? You could it's very simple to set up a traditional IRA, right? Whether it's E-Trade, there's so many different ways. Find what makes the most, and some of you guys potentially already have a lot of these platforms, right? From Fidelity and all these different companies. How can you be able to max out your contributions, right? There's lower contribution limits, but you can still max these out and be able to take that tax deduction this year. And then health savings accounts, or HSAs, right? These are phenomenal. One HSA is it's a special savings account for medical expenses. So you can be able to deduct this amount on your taxes, and when you pay those taxes, they're deductible. But when you withdraw these from the amount that you're putting in, if you withdraw them, they can be withdrawn for medical expenses. They can be tax free. You don't have to pay taxes on that money. Right? So you can be putting in that money for your business into an HSA. Some companies, like when I worked for a couple of companies that I was at before I transitioned into being independent, they were matching some of it. Right? They were putting a certain amount, a lump sum amount, to where I was able to utilize. And whenever I utilize that for medical expenses, I can withdraw it tax free as long as for a qualified tax free or qualified medical expense. Okay? So it's like a double dip, almost like two tax advantages. Okay? I'm going backwards. All right. Now, I know I went through a lot of details. I don't want to overwhelm you guys, but is that making sense? Am I giving value so far? Put a yes in the chat. Am I giving value? Okay. Yes. Okay. Awesome. Good. So, now, what most professionals don't understand is there's a difference between how you're structured and how you're taxed, right? SP, this stands for a sole proprietor, right? You can be a sole proprietor, and a sole proprietor, you're the only owner, you're responsible for every aspect of the business, and it's the simplest way to it's the simplest form of a business structure. You can get started, get your EIN number, and you can be in business, right? Then there's partnerships. Maybe you co-own it. So maybe you have let's say a lemonade stand, and you and your buddy want to, go in on the lemonade stand. You want to get it, incorporated. You want to enter into a partnership, right? You co-own it with another business or with another partner. And now, as a partnership, you now share all the responsibilities and you share all the profits and all the losses. So if your business profits, $100, okay, now those profits, it'll be separated. If it's a 50% partnership with you and your buddy, okay, he reports $50 that gets transferred over on a Schedule K1, right? And now they have to report that $50 as income on their 1040, on their tax return, and he's going to report $50 on his tax return. So the partnerships, they're a little bit different, okay? And then with LLCs, one of my personal favorites because it offers the most flexibility, right? And it has that liability protection, and it combines both the characteristic of partnerships and corporations, which I'm going to talk about. So you have the most flexibility to kind of like upgrade or downgrade. Okay, so we'll talk about that. And there's corporations, which is a separate legal entity owned by shareholders. So you get the liability protection, you have potential growth opportunities, you can sell stock, but it's handled separately, right? It's completely it's a separate legal entity. It's not going to go on your personal tax return. They're taxed at the corporate level, okay? Which I'm going to talk about. So sole proprietors, this goes on your 1040. It's a pass through. Well, all the income that you make is going to go on a Schedule C, and it's going to pass through over to your 1040, and you're going to file it with your personal tax return, okay? Which is the most common is your 1040. And then you have partnerships. A partnership, again, like I said, they're gonna fill out a form 1065. You're gonna put your profits or your losses. If you have $100,000 in losses, 50% partnerships, okay, great. Now your partners, you split up 50-50. He takes 50,000, you take 50,000, and now they're split up and they go on a Schedule K1, and you report that loss on your tax return. Okay. And then there's S corporations, right? S corporations are the like partnerships, and the income still passes through, right? To where now it's the same thing, right? But now the form is 1120S. You fill out, it's a form 1120S. It still takes the income from the shareholders as far as, and it gets splits up on a Schedule K1 for the shareholders now. And now those shareholders have to report whether it's the profits or the losses on their tax return. Okay, so it still passed through. So those Schedule K1s are very important, and you typically have to wait till you have that K1 to report it on your tax return, but that flows through to where now you can pay your taxes on your 1040, on your personal tax return. Okay, so that flows through. And then the last one is corporations, C corporations, right? To where now on the corporate side, you make $100,000 in net income. It's all about your net income, right? Not your revenue, but your net income after all of your expenses, right? 21% was a corporate tax rate. You pay 21% on that $100,000 of net income, and you pay taxes there. And then again, for any dividends that the shareholders have received throughout the year, they also have to file those on their personal tax return. So that's what we call with the C corporation double taxation. You pay taxes on the corporate side or the corporate level, which is the standard, is 21% for all corporate this year. And then you also have to pay taxes on the personal side. So you're getting taxed on both sides. So I run into different businesses and they're taxed as a C corporation, and they're not even generating a significant amount of net income. It's all dependent on your net income, right? And I like to recommend this, again, check with your tax professional, but typically this is what I recommend. You maybe want to write this down. Just get started with the business, right? Sole proprietorship. Just get started with business. But you want to get an LLC. I typically say you want to get an LLC as soon as possible, okay? Get an LLC as soon as possible. But when you're at the LLC level, when you start generating a profit of anywhere between $40,000 to about $60,000, you may want to consider upgrading to an S corporation to avoid that 15.3% in self-employment taxes, which it kicks in and people realize, like, why am I getting taxed so much? It's because of self-employment taxes, right? Which covers Social Security and Medicare. Okay, so you may want to upgrade when you hit that level in net income. And then I don't even recommend a C corporation until you start generating a minimum of anywhere from $400,000 in net income to over $500,000 in net income, right? That's when it may make more sense, because it does get more complex from a bookkeeping standpoint when it comes to an S corporation or C corporation, okay? Now, let me get a pulse. I just rolled through that. Are you guys following? Let me get a pulse. Are you guys following me? Does that make sense? There's a difference between how you're structured versus how you're actually taxed. Okay, good. Now, I believe in order to change your tax, you just need to change the facts. Right? That's the big secret. You just need, in order to change the tax, change the facts. Right? Does that make sense? Put a yes in the chat if that makes sense. And we're gonna dive into the last secret, and you're gonna like this one. Good, awesome. Okay, so secret number 3: how to find and hire the right tax professional. Right? How to find and hire? I don't even know how I put this in here, but it's really how to hire the right tax. How do you even know where to start to help? That's actually going to help you save thousands, if not more. Right? Where do you start? Okay, so I'm sure some of you guys would love to learn how to make $30,000 plus in taxes. Okay, and how to hire the right tax strategist to be able to help you do that. So let's talk about that. And I believe that this is the biggest secret, or the biggest problem in this country today, is that most small business owners and individuals at that, they believe that their CPA, their accountant, their tax preparer is saving them money on taxes. That's what they believe. They firmly believe that they're saving money on taxes, but they aren't. The reality is that they're not. Okay, so let me explain why. Okay, There's places like H&R Block, right? No shade, H&R Block. There's TurboTax. There's different opportunities for you to, free tax USA. You could even the IRS now. And just with H&R Block, I looked this up and how to become a tax preparer. I asked, can anyone take the course? It says H&R Block requires students to be 18 years of age to attend an income tax course. A GED or diploma, however, is not required. Okay, it's not required. So you could potentially be going somewhere and they have the extra helpers that aren't necessarily qualified to help you. But again, it's simple and it's easy. But I think sometimes we take the shortcut and end up overpaying, when we can look for a professional that knows the game, that could be a licensed professional that knows strategies and can be able to actually assist you on that, right? And that's the reality of a lot of, and then, again, no shade, but I wanted to make sure that I wasn't leaving any money on the table. So I wanted to look at all this. So there's different types of professionals that are out there. There's a lot of different types of professionals out there. The first one is there's tax preparers. Right, tax preparers, they help individuals and business fill out and file their tax returns. Right, there may be different levels of training and expertise. They may take different courses. Sometimes they have to keep up with different credits. But there's different levels. But pretty much they just file individual taxes and business taxes. Okay, that's the first level. Then there's another level of enrolled agents, right? These are federally authorized tax practitioners who are empowered by the U.S. Department of Treasuries to represent taxpayers before the IRS. So this is actually the highest level that the IRS awarded from a tax perspective, right? They focus on preparing tax returns for individuals, for businesses, for estates, and for trust, right? They're more so focused on the tax side of things, okay? So literally the C exam that they take is all focused on taxes, okay? And then there's CPAs, which is the common one that most people are, maybe you've heard of it, but stands for Certified Public Accountant, right? Which is a licensed accounting professional who has met specific education for, they've typically gotten their master's, right? Because you got to have 150 credit hours set for the exam. They have some experience, maybe working for the Big Four, from PwC or Deloitte, the companies that you've maybe heard of, and they've taken this exam, right? And now CPAs, they have a wide variety of services that they offer, from accounting services to bookkeeping to tax preparation to planning to representation. They kind of cover a lot of different things. They don't necessarily specialize in one specific thing, depending on who you're talking to, but they're all around, okay? Now, the top of the top, or the best of the best, my personal opinion, is the tax elite. The tax elite. Now, what is the tax elite? The tax elite are the ones, no matter what credentials that they had on those layers I talked about, but they have the education, right? They have the legal authority. They have the intangibles. They have the training, right? And not just training when they went to school, but ongoing training. And then they have the experience. They have examples of how they've been able to help other people actually do what they say they're doing, or what they're talking about, or what they're preaching, okay? And I believe the tax elite, what they do is they do tax planning. They tax plan. Okay, now what is tax planning? Okay, tax planning is, well, let's talk about what it's not, I guess. Okay, so tax preparation is a cost. Okay, tax preparation is a cost, whereas tax planning is an investment with a high ROI, high return on investment. So let me give you an example, okay? If I gave you $1, or if you gave me $1, and I give you $10, it's a pretty good investment, right? It's good. Okay, you gave me $1, I'm gonna flip it, give you $10. If you gave me $10, and I gave you $100, okay, that's pretty decent. If you gave me $100 and I gave you $1,000, again, that's a pretty good return on your investment. But if I also gave you, if you gave me $1,000 and I gave you in return $10,000, that's an even significant amount of return. Out of all of these ones, okay, what do you think is the best deal? Which one is the best deal? Is it $1? Is it $10? Is it if you give me $100? Is it $1,000? Which one is the best deal? Put a yes in the chat. I see you on Facebook. The last one. Yep. 1,000. 1K. Right? If you gave me 1K and I gave you 10,000, that's what tax planning is. That is exactly what tax planning does. It's what happens before the year ends, right? So after year end, it's tax preparation, right? That's when you're preparing your taxes. You're more reactive. You're going to go give your paperwork and just give it to your tax preparer and just say, hey, give it. Here you go. I would hope you have a profit and loss statement. I would hope you have a balance sheet, right? But most business owners, especially when you get started, probably don't know what I'm talking about, and you probably just got too busy in your business, as you should be, right? You're trying to make more money to where you didn't have time. So you're sending your taxpayer bank statements. You're sending them, receipts that you may have had, and now you got to go back and look. Oh, well, what was that for? What was this for? You're more reactional, and we all know when you're reactional, you miss things. So that's how you're missing on deductions year after year, because you keep delaying tax planning, right? Tax planning happens before year end, and it's the process of looking at a person's life, their business, regulatory requirements, things that's changing in the office, right? To actually legally help you reduce your taxes. We look at everything. I want to know how old you are. How many children do you have? How can we leverage them? We want to look at all different things to be able to actually help you tax plan, to see what's the best way for you to be able to save the most on taxes. So guess what? We're entering into Q3 and Q4. This is the best time to tax plan. I love this diagram or this picture, because the top of the iceberg, that's what most people think that they can save on taxes. Right? They maybe watched a video here, they saw something here, they're just like, oh, that sounds good. Well, I think I'm doing that. I'm going to TurboTax, I'm going here, I'm doing that. But the bottom of it, this is what really is out there for them if they were actually tax planning, if they were planning ahead, if they were doing it before year end and getting with a tax strategist rather than a glorified tax preparer. Okay? Now, you may be thinking right now that maybe you're not big enough, right? You're a new business. Maybe you're a new business. You just started your business this year or last year. You're still growing. You're in the growing phase. Or maybe you're still working a day job, which I believe is a cheat code. I did it. I worked a W-2 job, and I offset my income by starting a side business, right? Maybe you're working a day job. You're working a 9-to-5. Or maybe you feel like you're paying too much, and you're just a little bit afraid that you're going to get in trouble. Maybe that's you. You have that feeling that I heard about that, but I just want to make sure. I just want to keep the IRS off my back. They will be off your back if you're not ignorant to the information that is out there, and you can do it legally and ethically. Okay? Now, the power of tax planning. It's proactive versus reactive. Right? You're being proactive. Tax planning that's a process where you're managing your finances the right way to actually implement different strategies. You're not waiting until tax season. Okay? And you're on the offensive line. Right? I play football. Like, the offensive line was there to protect the quarterback. Right? When tax planning, if you're the quarterback, tax planning is your offensive line. They're there to protect you and put you in position to where that defensive lineman isn't going to come and sack you. Right? Isn't going to come and tackle you. Right? And you can get your plays off in time. Right? You're not in a 2-minute drill where you're trying to get these things off, in the last minute, in December, in the last week. Let's start now ahead of time to where you can actually protect yourself. And then you have that peace of mind. Right? If you got in Q3 a tax plan done, you now have the peace of mind to where you're not thinking about how much you're going to pay in taxes or how much you're going to get. You're already going to know. Right? The calculations that we create, you're going to know. You're going to have the peace of mind. It's like, oh, I can breathe. I know how much I'm going to pay in taxes. I know how much you're going to save in taxes. And then you can actually increase your wealth, right? Which is the big goal. We're not just working till we die, right? We want to be able to actually build wealth for ourselves. Okay? The best time to do tax planning is before you have the income, right? A lot of people say, I'm just going to wait till I make more money, then, I'll worry about it. No. Tax plan now, worry about, and just continue to make the money. It's before you make the money, before where you need to start doing the tax planning. And that's the big secret. Okay? You may think that, tax time is when, it's the best time for you to save money. But the reality of it is it's too late, because it's based on prior year's activity. So if you're talking with your CPA and you say, what can you do for me? He's going to be like, just give me your bank statement. That's all I can do. Oh, well, what if I try to move this, or I try to income shift, or try to do something? It's too late. You didn't plan it out. Talk with your tax strategist, your accountant earlier. I'm going to give you some things to ask. Tax planning, or understanding the tax code, is the best way to legally reduce your taxes. Okay? Now, I know I've been rolling. Okay? You might be wondering right now. We're 60 minutes in. Okay? I'm winding down now. You might be wondering right about now, okay, this is all great. I already got an accountant. Like, they're great. I've been working for them. I'm working with them for years. This is not about you firing your CPA, your accountant, your taxpayer, your enrolled agent, or whoever they are. This is about you learning the secrets to save you $10,000 of taxes every single year. Now, do you guys remember Patricia? So Patricia, CEO and owner of Nick Life Home Care. When I found Patricia, she was doing right around $123,000 in her business, and she loved her accountant. In fact, the accountant was actually a family friend that I believe went to her church. Okay, $123,000, and even though she was paying a few $1,000s in tax preparation fees, the accountant wasn't helping her save any money on taxes at all. Her business ended up growing from $123,000 to $1.3 million in less than a year time frame, and then it grew to like $3.2 million, right? But they had no tax plan in place. It was just, hey, this is what I got, and the CPA wasn't doing anything about it for a couple years. We found out she had been overpaying the taxes by $23,000, and on average for 2 years. And she was expected to overpay in taxes by $116,000. $116,000. That's over $46,000 in cash that she could have had. Or $46,000 cash she could have. Okay? Needless to say, she didn't like that accountant anymore. Right? She was not a fan. She was very upset. She was like, why am I going to pay this much taxes? Why aren't you doing your job? Right? And when we partnered up with her, we just implemented a few basic strategies, right, that she wasn't implementing from deductions, right? Found in a year saving $6,000, in 5 years saving $52,000. We shifted her entity structure, right? In year one, she was founded as a C corporation and wasn't even netting $100,000 yet, which was just right around there, and then she grew. She wasn't even, that was just revenue, not even net income yet. She shouldn't have been a C corporation. We shifted her entity structure, 1 year saving of $1,500, 5 year saving $12,000. Just by that simple shift. Retirement, $3,400 in year one. Built out a plan where she's going to save $28,000 over the course of 5 years, right? If she stayed the same, right? Insurance, $5,700, $48,000 in a 5 year tax savings, right? We shifted some income, right? Moved some things around. Maybe we utilized some delay tactics, right? Or some expediting tactics. $6,000 in year one, 5 year tax plan, $53,000 in tax savings. Year one, that's $23,000 in tax savings, $196,000 tax savings over the course of 5 years that she's going to be able to benefit that over the next course of 5 years and ongoing. She can utilize those same strategies over and over and over again, right? Now, I'm not saying that your accountant is negligent or incompetent. That's not what I'm saying. It's just that not everyone is educating their clients on how to save thousands on taxes. They're just preparing the tax return. It's just for compliance. And granted, there's some companies out there, they're doing thousands of returns. And in January alone, millions of people are filing their taxes as soon as the IRS opens up between like the 15th and the 31st of January. So there's a lot of taxes that need to be done. So they're just preparing it. They want to have already known how they were going to do your taxes the year before. They would love for you to be doing tax planning, right? Or most people aren't necessarily offering it. Maybe they're just offering tax preparation services, and they don't even want to involve themselves in tax planning. Does that make sense? I know I talk fast. I got a lot of stuff I'm trying to cover, and I got a couple more slides for you guys. But does that make sense? Put a yes in the chat if that makes sense. Okay, awesome. Good. Great feedback. So how do you go about hiring the right tax advisor? Okay. Now again, I told you not to fire your tax. You don't have to fire your tax advisor. Okay. But I recommend you ask some questions, right? And that's what my team. I'm always very fully transparent with my clients, and I want to educate them, right? And if your tax advisor, your tax accountant, or whoever is not educating you, you may want to reconsider finding somebody else, right? But these are some interview questions that you may want to keep in mind during that time, okay? And I like to say, like, what is your view on the tax law, right? How they view the tax law could affect how they actually approach taxes. Maybe they're very conservative. Maybe they're aggressive. I don't know. You probably should want to know that. What made you want to become a tax advisor, right? Knowing what their passion was and why they pursue this industry will show their passion. I know you guys can hear my passion in it because I love seeing the look on somebody's eyes when they have an extra $50,000 in their account and they can go put that and start to build stuff. They can, put some things back into their business, right? They don't feel like they're living paycheck to paycheck in their business or at their job. They can take that trip that they want, right? What is their passion level for what they're actually doing? Right? Do they have any public reviews or testimonials? I know I've given you guys a couple. I have several on my website, right? Where they can show you what they've done for their clients and how they can do it for you, right? I said, can you give me 3 examples on how to reduce an IRS audit, right? They prepare you for an audit, right? An audit is not necessarily a bad thing if you have the right accountant. They should be prepping you to where if an audit came, you have all the information. So it's nothing to be afraid of. It's here. I'm clean. This is going to be quick and we're going to be out the door. Right? What is your tax planning process? Right? What is your tax planning process look like? Understanding what they actually do. What's the steps in between to be able to help me lower my tax liability? What kind of support do you provide for your clients? Right? Knowing exactly what they have to offer and how they can support you. Right? How do you stay up to date on the latest tax laws? Right? How are you learning all this stuff? Like, where are you getting this information from? I would love some information myself. Get you on a newsletter. Tell me about your team of advisors, right? Knowing who they work with and the level of expertise. Do they have CPAs on the team like myself, right? Do they have other people who, you can trust with your personal information, right? Your accountant. I think those are the most 2 important people that you have is your accountant and your lawyer, right? They handle personal information. So who's their team? Like, can you truly trust in them? What is your risk tolerance when it comes to tax saving strategies, right? Like, are you aggressive? Like, do you play it safe or not? Like, what's your strategy behind that? I want to know. And then lastly, do you typically recommend tax deferral or permanent tax strategies, right? That's a more detailed question. Don't know what I'm talking about. They'll either say, nothing and they'll run and it's like, we're not doing that. And you need to go find somebody. You need to run. Or maybe they may be knowledgeable and they can guide you in the right way. But these are things that are going to activate you so you're dealing with the right person. Okay? All right. Let me ask you a question. Okay? We've been rolling here. Let me ask you a question. How are we doing? About 60 minutes or so. Okay? How many people feel like this? let me know. I know I've been rolling for 70 minutes now. Let me know if you feel like this in the chat. All right? A lot of information. I just threw at you in a quick 60 minutes. Okay? Let me put some words. Are you overwhelmed? Are you confident? Are you inspired? Let me put a word in the chat. Let me know how you're feeling. Okay, inspired. Okay, awesome. Good. So, what we covered so far, we covered secret number 1. Why understanding tax is your biggest ROI to increasing your wealth, right? How successful entrepreneurs and investors save $10,000 to $100,000 in taxes legally and ethically. And secret number 3, how to find and hire the right tax professional to help you save thousands, if not more. Okay? Now, I know you guys said you got some value, right? Put a value in the chat if you got value so far. Okay? So, I know I went through a whole bunch of information. Okay, so choice number 1 is you could go away with these tax strategies under your belt, and you can go implement them on your own. Fair enough. You can go do that on your own. I want you to implement these strategies. You can do it. You can do them on your own. Okay, that's choice number 1. But like I said, these are very foundational. I don't have enough time to cover all the details and how it makes sense for you. Okay, but these are very foundational strategies. Choice number 2 is you can stick around a little while and let me help you make your life a lot easier, right? Let's you focus on what you do best in your career, at your job, whatever the case may be. In your business, focus on your business while my team focuses on the accounting, the tax strategy part of it, right? That's choice number 2. So do I have permission to show you guys a great opportunity to save a lot of money in your taxes this year? Put a yes in the chat if I have permission. Yes, awesome. Good. So, for the ones who are registered for the tax class for the tax-free masterclass, I'm offering a free 1-hour tax wealth assessment with my team. Okay. With myself, okay? So you're gonna have the opportunity to where I want to learn a little bit more about your business and understand how much you can be saving in taxes. And I typically understand if you're overpaying taxes pretty quickly, okay? So my team's offering a free 1-hour tax wealth assessment, okay? I should be able to put the link in the chat, but here's the QR code. I'm gonna put the QR code up here. That way you guys can take a quick screenshot. And what I'll do here is I'll also put it in the chat. So this gives you the opportunity to scan that QR code to take you to a link where you can go ahead and fill that out. All right. And let me put the link in the chat here. Gives you some time. Oops. All right, here we go. So links in the chat. That's what you utilize to schedule your free 1-hour tax wealth assessment. Okay? Fair? Good. Now, I think that was up long enough. For those of you who stuck around, right, for this whole time, I remember I told you at the start, I have some resources for you that I promise. Okay? I'm not going to disappoint. Okay, so the reward for sticking around is I'm going to give you some free resources. Okay, so another QR code here with a lot of information, a couple ebooks. Okay, so I got my tax planning ebook. Okay, my tax planning ebook is a small business playbook ebook. Okay, and then I have the deduction blitz. So with the tax planning, I'm going to dive into a little more in detail as far as what tax planning looks like and how it can look like for you. Okay. And then we have the deductions blitz, right? Where I'm going to dive into a lot of different deductions, right? And some common deductions that you can implement and talk about some tax credits that you may qualify for. And then in my other ebook, the 12 biggest tax write-offs for small businesses, I'm going to dive into the 12 biggest ones, but I also have a section where I'm going to cover 200 deductions that you can get access to in your business. Okay? And then on top of that, I'm going to give you a tax compliance. Most of your business, you need to be compliant. If you're an S corporation, if you're a C corporation, you need to be compliant by doing potential annual reports or doing different reportings, hosting board meetings, right? Annual meetings, and actually reporting those things. I talk about those tax compliance and how you need to make sure your business is staying compliant. 100% free, right? Just for now, right? Only for the people who happen on this call. So this is the QR code. Make sure you get that. As a matter of fact, I'm going to drop the link for this one as well. That way you guys have it. Okay, 100% free. And if you're plugging in, watching me live, because I'm not saving the live, just go to smallbusinessplaybook.info/order. Actually, no, correction. smallbusinessplaybook.info/free. Okay, smallbusinessplaybook.info/free. Okay, that'll be a link. You'll be able to get access to your free copy of all my ebooks. And then on top of that, if you don't have an accounting system from QuickBooks to Xero to any of these different things, I even have a small business tracker, right? Small business bookkeeping tracker that you can utilize in Excel spreadsheets if you're just not ready to kind of jump in. You want to do some catch-up work. But again, my team will be available to be able to assist in that aspect as well, right? So here's a quick aspect of what you're getting. You're getting the tax planning ebook. You're getting the deductions blitz. You're getting the tax compliance run. And you're getting the small business bookkeeper tracker, which has a value of $175. But just for being on this call today, this being on this class today, we give it to you 100% free. Okay? Again, here's a link for it. Again, I'm going to give you one more opportunity. If you didn't get to scan the QR code or get the link, they're in the chat. That's your opportunity. Okay? And some of y'all stuck around. So would you mind if I gave y'all another bonus? Put a yes in the chat if you want another bonus. I'm giving out bonuses today. I'm feeling good. Put a yes. Okay, good. So, it's July. And July, I said at the beginning, is my favorite month. And why is it my favorite month? It's because it's my birthday month. Okay? and I'm actually turning 30 July 12th. Okay, so in honor of me turning 30, I said, you know what? I'm going to give 30% off bookkeeping cleanup, my tax planning offer, and business formation, and some tax and accounting services. Okay, so if you're whatever services you're interested from bookkeeping to for the month of July. Yep. So for the month of July, and I'll answer that in a second. I think when you get to I'll explain in a second, Melinda. But yes, so the month of July, turning 30 years old, they're giving 30% off for all bookkeeping services just for the month of July, all tax planning, business formation, and some different services. Okay, so in order to claim your discount, you got to make sure you go to iamaccountingllc.com to go claim that discount. Okay, so here's a quick example. You plug it on your phone. It's going to guide you here. You fill in the information, and you claim it. It's right there at the bottom right. It's going to pop up as soon as you hop in. It says claim offer. Okay, so I'll show you one more time. Awesome. Cool. So, real quick, I'll answer your question. So what part of it, Melinda, did it say should have taken you to the free one? How much did it say? Did it say $1? Yep. Okay. So the way it processes, it's free, but yes, it's gonna have billing info just so it has the information. That's the way to process it, and you should see it underneath the amount. There's no amount. It's the way to get it through the system for it to be free. You still have to put in your information. It's not gonna charge you anything. You still have to put in your information in order to be able to get the ebook because it does typically cost money. So once you get through the process, you'll see you won't be charged any sort of money. I have to put it in as a free trial. Yep. So it shouldn't show it. That's what I thought. Okay, good. Okay, cool. Yep. You shouldn't have to pay for anything. So that's good. All right. I actually ended it sooner than I thought. Right. Who's ready to take things to the next level? Right. Let's give me a round of applause real quick. I'm almost out of breath. Been rolling. Thank you. Don't all clap all at once, okay? But who's ready to take things to the next level? Put I'm ready in the chat if you're ready to take things to the next level. Awesome. Good. Well, again, I appreciate you guys for showing up. For ones who are plugging on live, plugging on Facebook, make sure you guys hit that link. Make sure you still, if you're in the chat, you got access to that link to book your free call. I think it's limited to the first 10 people. So yeah, we'll have a conversation. And hey, it's 4th of July tomorrow, right? 4th of July tomorrow. Make sure y'all be safe. I'm not a big fireworks person, but happy 4th. I hope you enjoy yourself. Take the day off. If you're a business owner, you deserve a break. I know I'm going to be taking a break tomorrow, relaxing. So spend time with your family, and I will see you later.